tell me a little bit about the profile of Kahn Litwin.
So Kahn Litwin is a accounting firm which is headquartered here in Providence, Rhode Island, or there in Providence, Rhode Island. We have 4 offices, one in Newport, one in Waltham, and one in Boston. We are approximately 160 people working for the firm, and we're very, very heavily involved with technology. Not we as accountants, but
no, I know that. It's okay, Bob.
it's people like Todd who kind of pull us through. And I think, how long has it been, Todd? A year? 2 years, 3 years, 4 years?
Virtual?
Virtual.
I was actually 2 years ago. Actually, yeah, you're right. It was closer to 3 years. About 3 years ago that we deployed the first virtualization in the environment. These guys have 160 employees, and they've got, obviously like every other company you ever encounter with branch offices, they've got limited WAN connections, and there were some challenges they were trying to overcome. When we see companies in this market size, usually, these guys had 25, 30 servers. They probably needed 40 or 50. But the reality is there's only so much resource to go around, so we look to virtualization as a way to get that under control. Pre-virtualization, it's been a long day. Pre-virtualization, these guys had about 30 servers. Every time a server needed to be updated, we had a power supply, memory upgrade, whatever it was, like every physical server in the world, it had to be shut down. They had limited redundancies available to them, and they had a hard time tying together some of those branch offices just because there's only so much bandwidth to go around. So we turned to virtualization as a solution for that.
Look, I like that one thing that Todd told me a story a couple of days ago that I was unaware of, that on April 13th of this year, now if you're a tax person, if you're a tax professional, April 13th is a pretty important day because April 15th is right around the corner. Todd informed me that the system went down. And if this was 2 or 3 years ago and the system went down, there would have been some people jumping out of windows. But because of virtualization, he was able to solve the problem, fix the problem, however he did it. We weren't even aware that the system had gone down.
I wasn't going to tell you at 2 o'clock in the afternoon on the 13th of April that, oh, by the way, a server's got a problem. Thankfully, I didn't have to because virtualization took care of that. So let's talk about cloud technology for a moment. When you save data right now, tell me where your data goes.
I figured you had a little floppy disk down there and saved it to a floppy disk.
Yeah.
Like we used to do in the old days.
Yeah, exactly. So what you're really saying is, you don't know. I have no idea. That's fine.
Don't want to know, don't.
So what Bob doesn't know is what you guys all should know, and what we don't want our users to know, which is that all we want is we want Bob to do his job. Bob preps my tax return on the 13th of April. I want him doing his job. I don't want him messing around with figuring out where to store data. I don't need him to know how to be an IT guy. I just need him to be good at what he does. And so we use the virtualization platforms to try and make those things transparent. We integrate the cloud technologies to make those things transparent. We focus on tools like Profile Unity to make those things transparent so that Bob can be Bob and we can all control the environment in a more deep way without having to interrupt his day. So I wanted to, I obviously wanted you to be here because I wanted to talk a little bit about what we've done with you guys with virtualization. But the really interesting thing, I think, somebody suggested to us, oh, you ought to have a customer come on stage. And I thought, yeah, that'd be fun. And then I immediately thought of you because I was talking to someone and they said, this is awesome. I was actually talking to a prospect and they said, but I've got to take this to the board and I don't know how they're going to react to it. And I started thinking, are there tools available to us that would help make this technology more accessible? Can I go to my senior management team and say, hey, I'm not an accountant, but I heard this and it might apply and maybe you should look into it?
Yes, there are. Because the economy is doing so well,
there you go.
Because the economy is doing so well, there actually are some provisions in the tax law that are there to accelerate, if you will, the purchase of hardware and software, to try to keep the economy going and keep jobs going also. So there's special rules in 2011 and 2012 with respect to how do you recoup the cost of having this done? How do you recoup the cost of having somebody go in and do what Todd does to your office, go VM, whatever go VM is.
All right, just talk about the tax part.
Again, because the economy is doing so well, for 2011 and 2012, there were special provisions in the tax law that will allow your employer to depreciate the purchase of, whether it's the software, the hardware, over a very short period of time.
I have a question.
Yes.
What does that mean? When you say depreciate, what, I mean, I'm not an accountant.
I was going to ask anybody if they do a depreciation method.
You don't have to. We don't.
Depreciation is just tax talk, if you will, accounting speak, on how you recuperate the cost of an item purchased. The tax laws allow you to recoup those costs over a period of time if they're capital in nature. Capital in nature means anything that's going to benefit a future period. Okay? So normally what you would do with computer hardware and software is you would depreciate it over 3 to 5 years, which means you would recoup that cost on your tax return, reduce your taxes over a long period of time. But 2011 and 2012, as long as your company doesn't purchase more than $2 million of equipment in 2011 or $500,000 of equipment in 2012, you're allowed to take the deduction all in 1 year. So what that means is this: if you're going to spend, if you have 100 people in your firm and put one of these systems in, fully loaded software, hardware, and labor, it's going to cost about $200,000 at minimum. You would be allowed, or your employer would be allowed, to recoup 40% of that cost in year one. So the actual cost is approximately $120,000. Now, certain states follow this rule, certain states don't. It depends on what state you're in. Rhode Island allows it partially, but even at worst case scenario, you're probably going to recoup 35% of the cost. So every dollar you put into the system, you're going to get back 35 cents in reduced taxes from your employer. So that may be a way to go into your boss if you want to put one of the systems in and say, hey, I have an idea. Somebody told me about this thing, accelerated depreciation, section 179 expense. And I think we're eligible for it, and I think we might be able to take it.
The best part of that is when you walk in to your finance guys and say, I know about accelerated deduction, section 179. Take a photo of the look on his face when you say that. It's going to be awesome.